Good morning, everyone. Thank you for taking the time to join us here on Facebook Live. If you do not have time to view this Q&A session in its entirety today, we'll be posting the video on our live Facebook page for future resources. This is the first time me doing this, so it's definitely out of my comfort zone. However, as mentioned, we've had several clients reach out to us during the past few weeks with several questions and concerns about the real estate market during these uncertain times. As always, we've built our business on providing valuable resources and information to our clients. So we've decided to put together a question and video series in hopes to help people understand things better. To help us do so, we'll be inviting professionals that we have the opportunity to work with on a regular basis to record a live show. You'll have the opportunity to ask questions through Facebook Live in the comment section, as well as email questions in. We'll do our best to address every question possible. To start with, we're honored to have Nick Maciota, owner of Lenderline, on as our very first guest. Nick formed the concept of Lenderline as a means to establish partnership between private lenders, brokers, and borrowers so that all parties could achieve equal success in this transaction. He will be joining us to discuss COVID-19 and your mortgage, knowing your options. Nick, I'd like to bring you in here. Hey, Nick, how's it going?
I'm great, James. Good morning. How's it going?
Hey, very well, very well. I
Good.
want to thank you for taking the time this morning to come on. It's great to have you.
Well, I appreciate the invitation. Love to be a part of this, James, for sure.
No, it's good. It's good. Nick, tell us a bit about yourself, Lenderline. We thought you'd be a great first guest as you're a little different than a traditional mortgage broker. Who are you and what do you do and what is
Well,
Lenderline?
okay. Lenderline, essentially, we formed the company as a solutions-based company, primarily dealing with private lenders to help facilitate deals that were challenging and outside of the box for not only A lenders, but B lenders and other alternative lenders as well. So what we like to do is work in unison with brokers, not only ourselves, we do act as a broker as well, but we work with other brokers and share our resources of private lenders and our programs with them. So essentially, it's all about facilitating a solution and helping us in situations where we need something a little outside of the box to make a deal work.
That's awesome. That's sounds like great resources for people and a great tool for all different types of clients.
Oh, absolutely. And each situation is unique. So we present it to our base of lenders individually. So each time we go with a specific situation, it's unique and tailored so that we're dealing on each specific one with its own merits.
Yeah, that's wonderful. Well, let's get to the real reason you're here. Over the past few weeks, we've had several people reach out to us due to the market uncertainty and specifically having mortgage-related questions.
Mm-hmm.
So let's go through these. I want to get your thoughts and hope that your opinion and all that can be a great resource for everyone watching.
Absolutely.
Um, yeah, so I'll start with the first one we got. So in recent news, the country's six largest lenders have worked together and deferred more than 10% of their mortgages in their portfolio. So I want to chat to you a little bit about deferrals and get some information on that. So given so many people are deferring their mortgage payments, if you're in a position to continue paying your mortgage, do you suggest deferring your mortgage payment or continuing making those payments? What are the pros and cons?
Well, again, each individual situation is going to differ. So we need to look at what makes up each situation. The program itself is a government program. So essentially, the government is basically mandating that all the major banks and lenders participate in it. The lenders themselves, it's not their own program per se. It's the government program, and they're essentially following that guide. So what we need to look at is again, it's deferring. So we have to understand that it is a solution, and it's a temporary solution. So there is a cost to that. So finding out how our finances work and whether we win or lose depends on each situation. I mean, the first question I ask is there an impact? Are we impacted by the employment of us individually, our partner? What's our situation there? Has somebody been affected by COVID? Have they been laid off? Have they been let go? What exactly? That's the first question we need to ask.
Yeah.
Because if we haven't been impacted, if we're still working, and I mean, there are some that are in that situation that are, I mean, it's business as usual, then we don't really need to get involved with this. So if we're impacted, you know, how is it impacting us? How much income are we losing? Is it both incomes or one? Also, what is the rest of our picture like? How are we able to carry that? Are we managing it well? Is there opportunity there as well? I mean, we're starting to see car companies, we're starting to see banks help out with deferrals on car loans, other loans. I know we've seen it from government student loans, those types of things. So what are the other pieces here? Are we able to look at that as well? The other thing is what's our savings picture like? Can we access some cash to get us over this hump, or again, do we not have that ability? And lastly, I would say again, if this might be an opportunity again to draw from retirement savings plans, those types of things. So those may be good options. I mean, each has an impact. Now, basically, again, we're going to have to look at all those 4 or 5 different things to say, okay, do we need help carrying our payments?
Yeah. No, those are great points. Now, if someone's in that position, so you know they go through the list that you just provided and says, you know what, I think I'm a good candidate to defer my mortgage. How does one go about deferring their mortgage?
Well, first of all, I will make this available at the end. We can. What I'd like to do is have a quick resource sheet so people will have phone numbers, etc., and links for people to contact.
That's great.
But essentially, we need to find out.
Hey, Nick. I'm just going to pause you there for a minute. I think we've lost sound. You looked like you were telling us a great story there, but I don't think we can hear you. Hey Nick, what I'm gonna do is I'm just gonna pause you. I'm gonna keep this live stream going. I'm gonna send you a new link. So I'm just gonna pull you off, send you a new link, and hopefully that'll fix it. The joys of live sessions. As I say, this is my first time, so we're just working out some kinks here, and hopefully that this will work. Nick, you're back. I can hear you, so I think everyone else can. So
I'm not sure what happened.
the joys of live, right? And technology, trying to work through these kinks. And like I said, it looked like you were telling a great story, but we lost sound. So
Okay.
I'm gonna back us up.
Okay.
You know, the last question was, how does one go about deferring the mortgage payments?
Okay. So I started off by saying that essentially we need to find out what our lender is offering, what their policy procedures, and what they're actually doing. It'll be a pretty simple form that you should be able to access online. That'll basically, most of them have a tab set up on their websites that'll take you to the program that they're offering. So first of all, let's find out what our lender needs from us if we wish to proceed, and what the framework is for how they will do it. Okay. Once we know that, then we can start to dig into it a little bit and see if it makes sense for us. Essentially what we're going to be doing is we're going to be taking the payment over that period of time, and basically we're going to defer it as the program states. We're not going to be making any principal payments at that. There will be no nothing going towards the principal. So at the end of 6 months, we're going to have the principal that was basically the balance where we started the deferral. We now have to take those payments, add them back in, and now it affects the amortization of the mortgage and of course the payment. So if we're deferring $1,000 a month for 6 months, we now have $6,000 worth of payments to roll back in, and we also have a balance that has accumulated some interest in the meantime. So we're basically going to take this and add it back in and now re-amortize the mortgage. So it will affect the payment. It will bump the payment up if we're still trying to end up with the same amortization or maturity dates, etc. So that's in a nutshell what we're trying to do.
Now, are all the banks doing the same thing, or is each bank different?
I would say that there's intricacies within them that are slightly different. And that's why I say we need to be specific with each lender, and that's why, rather than generalize, we're probably better. Anybody that would like, at the end of our show here, we'll have a resource available that they can access their lender, get to their website, get to their information, and if there's any questions beyond that, we'll help guide them there.
That's great. That's great. Now, another question that we've had a few people ask is, if you go about deferring your mortgage payment, will it reflect as an error on your credit report, cause a lower credit score? And is it
No,
reported as a missed payment or a late payment?
no. What the lenders and the banks will do is once a deferral arrangement program is in place, it will report normal. So although we're technically skipping the payments, it's not going to report on a credit bureau that it's late or a missed payment, because the structure and the arrangement of the payments will have been changed to be on a deferral program. So there's no need to worry there. Again, as long as it's done and in place before a due date. So we don't want to be doing this on the last day of the first month just before the payment is due. We want to be doing it in advance, because we've kind of gone through everything and figured that it would be a wise decision for us to move forward.
Got it. Got it. No, those are great points. Now, another common question that I've heard from others, and I'm sure you're getting it, especially in the mortgage world, is
Yeah.
given the low Bank of Canada interest rates, does this mean the banks will be offering a lower interest rate? And is now a good time to renew the mortgage? What are your thoughts on that?
Well, two parts, right? I mean, the first part, and it's very confusing to most people. When the Bank of Canada lowers the bank rate, that doesn't necessarily coincide with a drop in a 5-year fixed mortgage rate. The banks work on many different factors that'll influence that, but the bottom line is there's a spread that they need to maintain, and that our product has to fit within their spread. So early on here, a few weeks ago, we had 5-year rates down about 2.39, just under 2.4, and the bank rate did dip down below that later, and the rates are now over 3%. So again, it doesn't, they don't match, and it's complicated to understand it, but essentially it has to do with the spreads that they work off of. Now, is it a good time to refinance or renew? Again, the first thing here is we need to find out how far along we're in our mortgage, what term we have left, because that will impact the cost of tearing apart that contract. Okay, tearing apart and starting afresh. In some cases, the penalties are very small, and it's very easy to incorporate that cost into the deal, and it works out. If the penalty is significant, then you have to factor that in. Based on the rate structure and scenario, again, what we're seeing is unprecedented. The climate that we're in right now. So if we're worried and feel that anything could happen, we're not sure, it could be a good time to do it because of the uncertainty. The rates, even if we look at the increases over the last week or two, they're still very, very good. And again, if we can push those out and get through, be in a comfort zone through these times of uncertainty, that in itself is worth it. So what I suggest there is the mortgage professional that people are working with should be able to quickly tell them what the cost is to get out of their existing mortgage, and then should be able to incorporate some new numbers, and then the decisions should be pretty easy. When we're doing a refinance, renewal, those types of things, it's pretty quick to come up with the numbers. It's not like going through a whole approval to put the numbers together.
Okay.
That part's easy. Of course, there's approval process after the fact, but a good broker, or professional, or specialist should be able to tell you how much it is to get out and what the new numbers will look like fairly quickly.
Cool. Now, I'm sure this is a question you get often. Would you suggest doing a fixed or a variable mortgage
Well,
during these times?
again, in uncertainty, there's comfort in looking out ahead and being comfortable with something that is fixed.
Yeah.
Now the prime rate has dropped, so for somebody with an existing mortgage, they're going to see the numbers decline. On a new variable rate mortgage, the discounts from prime are not as good as they were earlier. So it kind of washes it out on somebody putting a new one in place. But I would say again, it's the comfort level of the individual. If and I'm basing that on the uncertainty. We really have no idea exactly how long we're going to be in this climate. Hopefully, we're talking a matter of a few months, and things will guide us back to normal. But it's still good to have something a few years out in advance that we know that part is not going to change. So again, I would say right now, I would lean that way.
Okay. Now, another question for you. It's like 21 questions here. Just gonna keep firing at you. Now, we're not practicing, business as usual. It's definitely not business as usual.
Right.
And we're only dealing with, emergency cases. Now, another common question we've had is someone that received a pre-approval prior to, the COVID-19 pandemic.
Mhm.
How do those pre-approvals work? Has anything changed? What should people be doing? Is that approval still there? Hey, Nick, I think we lost you again. Nick, can you hear me? Oh no. Wonderful technology here. On such a great question too. I'm going to do the same thing. I'm going to close you out. Go hit that link again and come back. Sorry about this, guys. I do apologize, and hopefully the next one will go a little smoother here. Anyone watching, if you have any questions, just type them in on the comments there, and we'll get to them as we get through these list of questions. Thank you everyone for the support, coming in, tuning in. It's great to see everyone and have you all here. Hopefully, this won't take too long, guys. Hey, Jennifer. Eva, thanks for coming by. Hope you guys are doing well. Hopefully, Nick comes back here. I think he's just come back here. Hopefully, hey, Nick.
Am I good?
You've come back. It's like every 10 minutes we lose you or something. I don't know.
I don't know
What's going
what's
on.
causing that. Where were we?
Yeah. Well, we were on a great question.
Okay.
So I'll recap it.
Yeah.
So what if you've already received a pre-approval prior to the COVID-19 pandemic? How does this change things? What should people do? And is that pre-approval still valid?
Okay.
Those are three questions all in one.
Okay. Well, we'll talk a little bit more about pre-approvals in a couple minutes, because I kind of wanted to talk a bit more in depth about that. But
Okay.
what we're going to talk about is somebody that had an approved deal. Okay. So,
Okay.
we have an approved deal on a specific property. Essentially, the date most people are using is the 25th of March. Okay, so
Okay.
March 25th. If a commitment or an approval was in place, if the conditions of financing were fulfilled, and we have a firm deal based on that approval, that approval is still good. Regardless of any change based on COVID, based on employment, that's still good as long as that deal closes by the end of September. Okay. Now that may differ slightly by lender. Okay, so that's why I say that I'd love to put the resources in people's hands once we're finished, but that's what I'm hearing from a couple of the main ones that I deal with. Okay.
Okay.
So yes, that part, but again, we're talking an approval. Okay, so approval means the property, the specific price, details, everything that's firmed up on that deal. We're not talking just a pre-approval. Okay. Now, so that's the situation there.
Okay.
So we're backing up. We're backing up to March 25th and approvals that were in place then. Okay, so that's how they're being handled.
Now, you've kind of talked about a few things in there, which this isn't a question, but I think
Yep.
it's something that should be addressed. What do you mean by, a pre-approval and then approval of the property, all that? What does that mean for somebody?
Okay, well, what I wanted that to be a separate topic because there's
Okay.
quite there's quite a bit involved. So we're there.
Yeah.
So essentially, I mean, with technology nowadays, we have resources at our fingertips. I mean, there's TV commercials where we have a husband and wife in a kitchen and the husband's getting a mortgage approval in 30 seconds. Okay,
Yeah.
now we need to be careful because, again, what we're getting is some form of what is being called a pre-approval, but that term can mean different things. Okay, essentially, if I'm doing this online, I'm entering my income in, what I believe my credit score to be, a couple other things, and sending it off. Essentially, all I'm getting is a rate lock. Okay, they're just committing to a rate, and they're gonna guarantee that because I sent this in today, I will get that rate.
Yeah.
They what we like in the broker community is an underwritten pre-approval. So we're sending it to our lender. Our lender's underwriter is calling me and asking me questions about the deal, asking me about the income on the deal, asking me anything that's a little gray. They're going to call us and ask us so that when I get that approval back and I call a client and say, I have a pre-approval in place, somebody actually looked at it. Okay, if
you
it's
verify documents, income,
exactly,
all that.
which again might, from the client's point of view, seem to be a hassle, but it eliminates hassle in the end because in your position as a realtor, going to release a financing condition, if you know that it came from a source that had it underwritten rather than just pushed through the system electronically without any review, you know you're good, you know your client's good, and everybody's comfortable in that transaction. So I see a lot of people in my office that come from elsewhere where they've had an automatic pre-approval and now they're wondering why it fell apart. So we need to make sure that we understand if it's worth the paper that it's printed on, it needs to be reviewed, underwritten. And a good tip off is if you are the borrower,
Yeah.
and nobody has ever asked you for a document or to verify a document, then it's not a good pre-approval.
Okay. Okay. Now, I think that covers a lot. Now, when someone comes to you and they have all the documents, go for a pre-approval, how does one go about choosing a lender? Do you choose the lender? How does that work?
Well, that's a very good question. Essentially, there are differences between them. I mean, when we're looking at what's available to us in the broker community or as a client, I mean, there's quite a bit available there. Now, on the broker side, when we get into if it's strictly rate, there's stripped down mortgages, okay, or a value type mortgage where there's something being taken away to get that rate down, and usually that's flexibility. Okay, there's going to be a prepayment privilege that's not there. There's going to be a heavier penalty to get out. There's some intricacies there that become a part of it. So I think as a borrower, you need to ask that question to the broker. Why is my deal going to this lender? Why do you suggest this lender? Okay. Usually we like to work with people that are flexible, that are going to give our client very good service. So that's the number one thing. But what do we give up if we're in a rate scenario?
It's a give and take.
Yeah, absolutely.
Give and take,
And the other thing too is you should have some guidance from the specialist or the broker as to where the deal fits. Not everybody knows their credit situation. Maybe there's something in there that they aren't aware of. So we need to know, where does my deal fit? If it's not going to a bank or an A lender, where is it going to end up? Is it going to end up, in an alternative stream, private stream? We need to know that. So when getting back to how we're picking the lender, that will certainly have an influence on it.
Okay. I think that covers that topic pretty good. Thanks, Nick.
Good.
Now, another question for you, kind of changing gears a little bit. If things are tight at the moment, and someone has a home equity line of credit, is now a good time to dip into your home equity line of credit, and maybe tell us a bit about a home equity line of credit in case someone doesn't have one?
Well, I mean, again, very good question. There are a lot of people out there that have a home equity line. So, I mean, in most cases, we treat that as a second mortgage or a mortgage behind our first. I mean, some of the banks have unique products that are tailored to have both kind of combined into one. But essentially, if we have a home equity line with a large limit, now is a time to be careful. It's not necessarily a time to access all of that, because I want to. Some of us will remember 2008, and what kind of drove the issue in 2008 coming from the U.S. There were situations where people had lines of credit, and the banks and lenders simply sent out letters to them and said, listen, by the way, due to the current economic climate, we're going to change the limit on your line of credit, and it's no longer going to be 100,000, it's going to be 15 or 20. So we need to be careful there. That, you know, you may want to access it before there is any change, but the other thing is we, you know, we may see some change in values, and that could be impacted. So I think we need to be careful there. That yes, I mean, in emergency, if we need to draw from it, great, but let's be careful if those limits are big, because again, we still have to be able to make the payments on them, and it will impact. I mean, it can have a large impact later if we're buying, selling, or redoing.
Yeah. Now with a home equity line of credit, and you know, say they do reduce it, is it a matter of it being called back, and all of a sudden you have to pay?
Well,
For what you.
I mean, 2008 is the example I use, because that I remember it in my office where we had a couple situations like that. I had one particular manager for one of the lenders that I was using at the time was rather upset because they, as an employee of the company, had their line reduced substantially. So it did happen. And that's why I say with the climate right now, and the banks are a little worried about their margins, they're worried about default rates. There's some concerns there. They may start backing off on some of those limits. They can do that. They're in contractually, they can do that quite easily.
Interesting. Yeah, it's very interesting. Well, I want to shift gears again. The next thing, you know, you kind of hang your hat at Lenderline on being, you know, a solution to every solution. I'll say, meaning you can help, you know, those A-type people, and you know, people that might, you know, a financial institution can't necessarily work with. And then I know you also do a lot with private mortgages. So I wanted to talk a little bit about private mortgages. You know, what is a private mortgage, and you know, what does it mean, and how's it different?
Well, I think essentially it's very different. I mean, on the private side, we're basing all of our deals on the property. I think we're going to lose you again.
Oh, I'm here. Can you hear me?
Can you hear me?
I can hear you loud and clear.
Okay.
It's that next 10-minute mark.
I know. I don't know what's causing that, but anyway, my.
Oh, hey, we did lose you. You predicted it there. Hey, Nick, lost you. Stop. Okay, sorry about that, guys. This is a third time. I don't know what's going on here. It's just give me 1 second. Hope you guys are finding all this information resourceful and valuable. Again, if you have any questions, we're coming to the end of this. Just ask them in the comment section, and we'll ask Nick, and go from there. Looks like. Hey, Nick. Just adding you back in here. You predicted it this time. I don't know how.
Okay, we started talking about private mortgages, and
yes,
essentially, again, what we're doing differently on a private deal is we're using the property, the equity in the property, the strength of the property primarily before we consider the income and the other aspects or credentials in the deal. So doesn't mean they're the only things we consider, but they hold more important to us than the possibility of somebody being new to employment or some concerns with credit. That will hold more weight. So we're going to find a lender that's comfortable with our property and comfortable with our deal, and we have many options available there. And On the private side, very quick. We can tell very quickly whether there's interest in the deal, what the deal is going to look like, and it's a very simple process to come up with a proposal.
Okay. Do you want to run us through that, how that looks? So someone comes to you, how do you assess if they, that's the route to go or not?
Well, again, I think a lot of times we're trying to bridge a gap, and that's why we've kind of landed with a private deal. We may have a situation, I mean, a common private deal would be trying to provide bridging on a deal where we got closing dates on two properties not lining up. People may not qualify to carry both mortgages and both loans at the bank. So we don't want a deal not be able to close because of those gaps and the inability to support that. So a private lender, we'd look at that and again, based on the strength of the equity in the property, we'd be able to put something together pretty quickly on a short term to bridge that gap that we would base on the property, not on the fact that we can't qualify the two of them at the bank or institution. So we're going to look at the property. We're going to look at the values of the property, the strength of the property, and we're going to find the right fit from our private lender that understands that property, that market area, and as I say, it's very quick and easy to come up with numbers on that type of deal.
Yeah.
Now, the misconception is that a private deal is very rigid and the rules are rigid. No, the rules can be specific to each lender.
Yeah.
And they can work with the borrower to accommodate the situation. So it's actually much more flexible than a standard institutional.
That was going to be my next question. Like, is there more flexibility? How does that work? I know with the traditional bank, someone has an issue, you call the 1-800 number. Is that the same with a private mortgage?
No, very, very different. We're going to be able to get to our lenders very quickly. We have a good understanding of what we can and cannot do with them and what they like to do. So there's more flexibility there. I mean, if we're in a situation where we need to lengthen a contract, shorten a contract, or manipulate it for whatever reason based on whether it be payments, etc., there's more flexibility. Okay, and they're not hard and fast because, again, they're an individual investor, and each situation will warrant their comfort. So whatever if they're comfortable with the deal and are good to accommodate it, it's quite easy. And it's not a long process where we have to start from scratch.
Got it. Now, what do the fees look like on from a private lender?
Well,
is there CMHC involved? That kind of stuff.
Well, something. It's I mean, on a private deal, we're always talking about what the fees are. Okay, because what's different, very different, is when a broker has an institutional type deal, he's paid by the bank or by the lender. When we're into a private scenario, the broker has to charge a fee to get paid on a deal. So number one, a private deal requires a broker fee, and then there's fees from the lender, which usually are to help cover his legal costs and so on, and costs to move the money or make the money available. That's another thing, because the lender may be taking that money from another mortgage or another investment to free it up for this particular deal. Now, it's something we always talk about. you have to cut to the chase on a private deal. Yes, there's fees, and here's what they are. But what's surprising to me is on the A side, we never talk about what's my CMHC fee. How much is that costing me? It's always just what's my monthly payment, and so we kind of need to think that way on the private side too. It's part of the deal. It's in the deal. It's very similar to what it would be paying a CMHC or an insurance fee on an A deal. So, but usually you're probably looking at somewhere in the neighborhood of 3-4% in that range of which would likely incorporate most of your fees.
Okay. Now, would you say private lending is that a short-term or a long-term solution?
Well, I think I would say a short term.
Okay.
It kind of helps us acquire the property, helps us deal with any things that we need to deal with on the financing front. It makes it easier for us to get in and not, again, we don't, I mean, with what's gone on in the market with the pricing and the bidding and you know, the availability of property, you know, if you're able to work with private investors, you can get the deal done. Okay, so if again, we talked about bridging, we talked about maybe, you know, some way to facilitate some of the down payment. There's ways that can help. It can be long term because again, a private lender will work with the borrower on a renewal, and if it's a long term deal and it's profitable to him and it makes sense for the borrower, then it could be long term. But I would say most private deals they're written for a 12-month period, and they usually have an option to renew at the end of that time.
Got it. Okay. Well, that was a lot of information, Nick. You know, I really appreciate you know, you taking the time and answering these questions. And
oh, absolutely.
You know, I hope it's been you know, helpful and resourceful to everyone watching. And if anyone has any questions, I know there's a bit of a lag here, but if anyone has any questions, just feel free to drop them in the comment box. And if you happen to be viewing this after it's live, you can still ask there. Send us a DM, send us an email, and we'll get the questions to Nick, and you know, so he can answer them for you. Nick, is there anything that you know I've missed?
Oh, not at all. No, I really appreciate the invite. And as I said, if anybody that's a part of this would like more information, I will have some resources available, and that'll connect you with your lender, with their programs, and I'm happy to answer any questions if somebody just wants a bit of guidance on whether they feel, again, that they would like to proceed with the deferral or want some analytics on it. If they just want some numbers crunched, we can put some real numbers together, no problem.
Oh, that's great. And I'll post your information here so that anyone watching, if they want to reach out to you, they could do so.
Absolutely.
And you know, thanks again, Nick. It was truly a pleasure having you on here, and thanks for everyone watching.
Perfect.
So we had a few technical glitches, but we got through it. And you know, thank you again. And we'll be posting more of these videos. And Nick, I hope you know, we can have you back.
Oh, absolutely.
In the future, and in terms of updates and that kind of stuff. We're going to keep this going.
I'm still here.
Try and bring resources to people a few times, you know, a week if possible, and go from there. That's good.
Super. Thanks,
awesome.
James.
Well, thanks, Nick. Have a good one, and stay safe.
All right. Take care.
Okay. Chat soon.
Bye now.